Good weekend, all. I'm Epstein, and here we are with your weekend edition of your SPDR ETF stock market wrap-up. And this is Saturday, the 26th of October, 2024. Well, as you know, the big event's just staring us in the face. 10 days from now, we're going to get the U.S. presidential election, and it's a horse race. So I've never seen an election absolutely this close. And, you know, it depends which poll. Is this one leading by a point or two? Is that one? Are they dead tied? It's just fascinating to watch. I have my own doubts that we'll go to bed and it won't be contested. Somebody will cry foul. I expect that. They're already seeing it. I read that 2,500 ballots that were cast already are being thrown out because they're bogus addresses, names, and so on in one state. We'll see. You know that's going to happen. So the question is, what are the safeguards and how good? We just went through 4 years of a real problem. Yeah, 4 years, because it's still not over, right? Ex-President Trump is still fighting battles about this, so it just doesn't seem to end. The other event that's taking place is the strength in the U.S. economy. It just is unabated. It just stays strong. We're not seeing signs of the labor weakening the way that we were told. Even the hurricanes didn't do anything to the jobless numbers, which has got people scratching their head. And then, of course, today, you know that Israel did attack Iran. They did it the way that the United States had been pushing them to do, not going after nuclear, not going after the oil fields, and any manner, just military targets. And it doesn't look like that much damage was done. But again, I haven't seen the press photos and all yet. We'll be seeing that, and both sides will claim victory. Iran will say its defense systems worked absolutely admirably, took down most of the barrage that came at them. Israel will say they did serious damage, and both sides will reserve the right to fight again, and we pray they don't, right? Isn't that it? As for Anthony Blinken, he's in the Mideast. He's going to be in Qatar. They're trying to do another short-term deal. The one that's on the table won't work. So can they get something for 6 days and get a few people released and let some aid in for Hamas? I don't know. You know, the ball's in Hamas court. All right, they don't want to do it. They want Israel to pull out completely. It isn't going to happen. The old-time siege that we saw in medieval times is taking place. We read about it every day, that the aid trucks aren't making it in. The people, you know, I think Israel's letting the people that want to get out, get out. The people that want to stay in that area, that's what you're going to get. When we take a look, I'm going to keep DWPCF, and again, this represents the performance of the broad U.S. stock market, including large, mid, and small cap stocks. So it's a little bit of everything. And as you know, if you looked at the NASDAQ on a Thursday and Friday, it was soaring because of Tesla. But when you back that out, the other indices backed off a little bit. And you see that little bit of a back off in the market right here. What's the pattern? It's still bullish. You have higher lows, higher highs. What's the seasonality with pre-election, election, post-election? I've done reports on it for you. I hope you remember what they were, because the one that I did for pre-election has been working pretty good. I'm happy with it, to say the least. And in looking at these markets, well, you're pulling back a little bit. The support of the market, wherever the 18-week average comes in, that'll be the support. Right now it's 2107, but if you go back the week before, it was 2096, the week before 2082. So let's assume it's 10, 11 points a week on average that it's going up. That could put the market in the 2118 to 20 level, very close to that last break low of 2124. If you take out 2124, you end the uptrend, but that doesn't mean you've begun a downtrend. That would take a lot more work than this. When we take a look at where the resistance has been, well, if you don't see that it stopped at the Bollinger Band each time, the algorithm, you don't understand the algorithm. It's that simple. But that is what it's done, and the pullbacks from it, if you have an embedded reading, have offered the buying opportunities. Prior to that, it's anybody's game, and notice how you came down all the way to the 18-week average here in August, September, and you just shot up again. So the market has done one thing continually. It's gone on to make higher highs. people that came out at January, well, December and January. First it was the S&P 52, 5400. Then it was 54, 56, 56, 5800 in the S&P. And now we're sitting here, well, now they're talking 6,000, 6,200. We'll see. Amazon's been a son of a gun to try to trade. It's overbought. It just keeps hanging at the 18-week average. So while the trend is up, it just doesn't want to pick up and run. Hasn't done it. In RSP, which is the equal weight ETF for the S&P, and is similar to what we just saw in the first charts, market pulling back just the way the DW did. It's the same game plan. I don't see any change on that. In KWEB, so now the question is, what is China going to do? They gave us this week the dates that they're going to make the decision with the big committees that do this. We've already seen the monetary policy decided about 2-3 weeks ago. Remember how the stock markets there all jumped because the bank had done certain things, allowing purchasing of more stocks. I can go on and on. Now you get to the, instead of that, the fiscal policy, which is what the government's going to allow, and that's very different. So are they going to satisfy the appetite of people that want to see more action to get the housing bottom in place and more stimulus for the economy, or they're going to say what they've been doing, and that would be a big story. If the market takes out not this week but last week's low, you open the door up to go back and challenge this 2874 level. If something leaked and the government's going to do something spectacular, that shouldn't come out, and I would think you're then going to rally up there. This is an interesting point on the chart. Restoration Hardware, a huge key reversal. Now, what's key reversal and an outside day? A key reversal is the highest high of the move. And that's what it did. And then it had, in addition to that, an outside day. It took out the prior week's high and low and closed lower on the week and under the opener of the week. It all has to fit in a certain way, and it has. You could be going back here, so keep your eye on this. The marketplace is at embedding. So if we take a look, and let's see if I can get the chart to move. Doesn't seem to want to, so I'm not going to be able to get that done. I'm sorry. Let's see if this one will move. And if it does, maybe the other will. Doesn't want to let me do it. Meta, pulling back. I think Meta's got good support in the 530.90 level, 531, right in that general zone. You still have the embedded reading. Even if you lose the embedded reading, I think it'll go there and try to find support if it's going to drop. I'm not saying it has to drop there, but that looks to me like an interesting area for that. In KRE, no, I have got a problem. On the first move to a 200-day average, markets often have a lot of problems. That doesn't mean they have to fall apart, but they often stall out. And if you don't think that's a stall out, okay, you're entitled to your opinion. I'm entitled to mine. I see the trend is up. I see a market that is trying to have an embedded reading, but it's not there yet. And if it lets go here, it could pull back and fight a battle between the 200-day average and the 18. But the trend is up until the market gets underneath, right over here. And that number, I think, was 50.89, something in that area. Take a look at it on your chart. I can't get it to go back. The clicker's not working. On MCHI, the Chinese, this is sort of like KWEB. I believe that if you were to come in here and take out last week's low, you open the door up to come back down here. I'm not in love with the long side of this market. I thought it would fail on the first challenge of the 200-day. I thought it was overdone with all the euphoria, and you were left standing there from 59.79. Now you're down 20%. At 49.89. That's a heck of a drop that the market saw. So when people get all excited about something China says, I am of the camp, let's see the reality of the situation, because I don't believe anything they say. In XLI, the industrial sector, pulling back, but still bullish. This chart is still long-term good until the red line closes under 79. I think the pros will buy the dips in the market. On the energy sector, now it gets interesting. You're going to be waiting on China to see just how good this sector is going to be, because the market wants to see, is China really going to add stimulus? But you've taken out Israel, Iran, because the event happened. and nothing major happened with it, so that would pull out some of the bullishness in the market potentially. When you look at the dollar, well, anytime you go to an upper Bollinger Band, the hair on the back, and I got a lot of hair, the thing that happens is it stands up, and that's where I think the pros are going to take some money off the table now in this market, which means what for the gold? Well, if the gold pulls back, it's even friendlier, the gold. Gold keeps coming up, hitting the Bollinger Band, backing off, and until it loses that, I'm still very much in the bull camp here. I've got clients that are in that. I got clients now that are in the futures as well, if they're following my advice. Whether they do that, that's up to everybody. I know some did because I got really nice letters on Friday. Higher low, higher high, and I could see how the market pulling back here. I got a letter, not letters, but it was really nice, and I do appreciate that. The person said that that trade alone paid for their whole service for more than a year, and I agree. But we'll see what goes on here. So the copper fighting a battle there, that's my news, and we'll let it go with that. I want to remind you that while I'm gone, a good thing to do is take advantage of the free offers that we have up. And those offers, you know, you select the offer that you want, it'll be on a page that looks just like this on your computer, and it goes into your cart. When you're through picking which ones you want, and we've got quite a few to pick from, at that point in time, away you go. Now, one of the newest offers that I'm starting to do I put it out to my subscribers, was Season X. Working with them, and through us you can get a discount on it. So when I get back, we'll put that up there, but it's not there yet. That's one of the charting services you see in my special reports. I just worked out the deal with them last week, so you'll see me putting that up there for you, and we'll love for you to take advantage of things like that. But as I said, different video series, our charting software, my written advice, things from Linn, all through here. The rune indicator, and again, you just click on what you want. At the bottom of the page will be an area that it's going to ask you to put in your name, your email address, if you have any comments for us, what you'd like, and we will take it the rest of the way from there. So it's that simple. IraEpstein.com, free offers. You can also move your cursor to the top for an icon. And I'll see you next Sunday with another edition of your weekly charts. You take care.